Good morning, investors. You are now on KleverStock with me, Ainun Jaria, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. The domestic market opened on subdued note today with little excitement among investors as the FBM-KLCI remained trapped in a consolidation phase amid a lack of fresh catalysts. At the opening bell, the benchmark index inched up just 1.64 points to 1,610.79, recouping only a fraction of the losses recorded in the previous session. A technical review by TA Securities pointed to ongoing weakness in short-term momentum indicators, signaling a bearish tone for the local bourse. The firm added that longer-term indicators also suggest further profit-taking and consolidation may be on the horizon. It said weak domestic sentiment and the absence of strong catalysts continue to weigh on the index, noting that external factors, including the ongoing U.S. government shutdown and hawkish remarks by Federal Reserve Chair Jerome Powell, have further dampened investor confidence globally. In contrast, Rakuten Trade offered a more upbeat view, forecasting a potential market rebound driven by bargain hunting activity. It said in its note, though market undercurrent remains cautious, we are adamant that bargain hunting should emerge anytime soon. Hence, expect the index to hover within the 1,605 to 1,615 range today. Among actively traded counters, Nestle led gainers, rising 1 ringgit and 10 cents to 114 ringgit and 10 cents, while YTL Power added 7 cents to 4 ringgit and 6 cents. Malaya Cement jumped 14 cents to 7 ringgit. KESM gained 8 cents to 3 ringgit and 71 cents, and MN Holdings advanced 7 cents to 1 ringgit and 94 cents. Meanwhile, DNEX was up to 2 cents to 32.5 cents. Genting Malaysia was unchanged at 2 ringgit and 33 cents, and Digistar rose half a cent to 6.5 cents. Moving on to local currency updates. The ringgit opened higher against US dollar on the first trading day of November, edging close to its one-year high as investors anticipated that Bank Negara Malaysia will maintain the overnight policy rate at 2.75% this week. At 8 a.m., the local note stood at 4.1795 or 4.2005 against the greenback, compared with last Friday's close of 4.1860 or 4.1930, a level last seen on October 2, 2024, when it traded at 4 ringgit and 17 cents. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid said the ringgit's positive momentum is expected to continue ahead of the Central Bank's Monetary Policy Committee meeting on November 6. He said we expect the OPR to remain unchanged as the narrowing of interest rate differentials between the OPR and developed countries' policy rates is seen to be the key driver for the ringgit, especially as BNM maintains its monetary stance in light of steady economic growth and benign inflation going forward. Dr. Muhammad Afzal Nizam added that the federal government's commitment to reduce the budget gap to 3.5% of gross domestic product next year would be credit positive and could encourage more foreign investors to purchase Malaysian government securities. He told that given that there is a lack of United States data due to the US government shutdown, traders would probably be looking at domestic factors to form their opinion on currency movement. Expect the US dollar ringgit pair to range between 4.18 and 4.20 today. At the same time, the ringgit traded higher against most major and regional currencies. It strengthened against Japanese yen to 2.7104 or 2.7242, advanced against the British pound to 5.4889 or 5.5165, and rose versus the euro to 4.8177 or 4.8419. The local note also improved against Singapore dollar to 3.2103 or 3.2267, appreciated vis-a-vis the Thai baht to 12.8683 or 12.9425, and was almost flat against the Indonesian rupiah at 251.3 or 252.6, and slightly better against the Philippine peso at 7.11 or 7.15. Now, the ringgit's steady performance reflects growing investor confidence in Malaysia's monetary and fiscal direction, as attention now turns to Bank Negara's November 6 decision, which could shape the local and regional currency outlook heading into the end of the year. Continuing with economic updates. Sistek Berhad's newly revamped leadership is steering the ACE market-listed technology group into a bold new chapter, centered on artificial intelligence and data center link solutions as it targets expansion across ASEAN's growing enterprise markets. But with the company still in the red and fresh from a major acquisition, the next 12 months will be crucial in proving whether Sistek can turn strategy into sustainable performance. Executive Chairman Dato' Ong Theng Soon, who took the helm on October 1st, said the group is sharpening its focus on recurring digital income and strengthening its technology portfolio. He said in an email interview, "We are working to refine Sistek's corporate strategy, enhance board oversight, and prioritize areas where we can scale recurring income streams and strengthen our technology portfolio." The group is now expanding its AI-powered data center infrastructure, cybersecurity capabilities, and enterprise platforms following its 75 million ringgit acquisition of Wilstax Berhad last year, a move that broadened its digital transformation and compliance solutions. For the first quarter ended June 30th, 2025, Sistek's net loss narrowed by 66% to 518,000 ringgit from 1.54 million ringgit a year earlier, while revenue more than doubled to 20.82 million ringgit from 10.19 million ringgit, supported by stronger digital platform deployments and e-logistics activity. Ong described the financial year ended March 31st, 2025 as a turnaround year, citing improved operating discipline and rising revenue, though the company remains loss-making. He added that demand for digital transformation and AI-driven services continues to grow across ASEAN, particularly in cloud modernization, e-invoicing, cybersecurity, and automation. Ong said regionally, we are evaluating expansion into high-growth ASEAN markets where demand for AI infrastructure, digital compliance, and cloud services is rising. Our investment priorities include AI capabilities, blockchain integration, and next-generation cybersecurity tools. He noted that Sistek will remain prudent yet proactive in deploying capital, including in data center assets and strategic partnerships, while keeping capital market options open. Analysts say Malaysia's accelerating push into AI and data infrastructure offers a promising growth runway, but warn that competition is intensifying. With tighter margins and growing capital demands across the tech ecosystem, the real task for Sistek now lies in execution, turning vision into value and ensuring that AI opportunity translate into lasting profitability. Moving on to corporate news update. GX Bank Berhad is doubling down on its mission to expand fair and affordable credit access for Malaysians, particularly among underserved communities, as part of its long-term push for financial inclusion. Chief Executive Officer Kaushik Chowdhury revealed that 57% of GX Bank's customers come from the bottom 40, also known as B40 income group, a clear sign that the digital bank is making inroads where traditional lenders have often struggled. Kaushik said that if you look at the income segments, almost 57% of our customers are coming from the B40 group. Of course, Klang Valley has a big number, but it's actually pretty well spread out. This tells us that it's not the urban affluent who are just using us. Turning 2 years old next month, the digital bank now serves about 1.2 million customers. Kaushik said the next challenge is enabling wider credit access, particularly for those who are new to credit. He said the number needs to grow, and that's where alternate data comes in, mainly from Bank Negara Malaysia and Paynet, adding that GX Bank is in talks with more digital platforms beyond Grab to access additional data and strengthen its credit scoring capability. Kaushik explained that data from even a single platform has enabled GX Bank to extend loans to underserved users, but expanding credit access will be a long-term effort requiring new data partnerships and infrastructure. He also credited GX Bank's rapid growth to its streamlined digital onboarding process, which allows customers to open an account in just 5 minutes through its mobile app, a sharp contrast to the previously clunky process that requires in-person branch visits. Looking ahead, Kaushik is confident that GX Bank will reach its asset cap of 3 billion ringgit by the middle of next year. Currently, the bank stands at about 1.6 billion ringgit in assets and is growing rapidly within the cap set by Bank Negara Malaysia when it granted the bank's operating license in 2023. Kaushik said our asset cap was set at 3 billion ringgit and we have to operate within the cap until we graduate. We are at about 1.6 billion ringgit and growing very fast, and confident that they can easily be at the cap sometime in the middle of next year. GX Bank's strong uptake among lower-income Malaysians underscores a growing demand for inclusive, digital-first banking solutions, signaling a shift in how financial access is being reshaped across the nation. And finally, wrapping up, we have major corporate developments and deals across Malaysia. CIMB Group Holdings Berhad has issued its first ever renminbi denominated bonds in China. The 3-year Panda bond raised 3 billion yuan, also known as 1.8 billion ringgit, and was priced to carry a fixed coupon rate of 2.18%. Bina Puri Holdings Berhad has proposed a conceptual scheme of arrangement under which creditors would grant a 10% waiver on its standing debts as the company seeks court protection to complete its financial restructuring. Sarawak Consolidated Industries Berhad said it has accepted a second revised contract worth 172.4 million ringgit from Perbadanan Prima Malaysia to build affordable housing in Kota Baru, Kelantan. Rubber glove manufacturer CarePlus Group Berhad said its external auditor Deloitte Malaysia PLT has issued an unqualified opinion with a material uncertainty regarding the group's ability to continue as a going concern, as it disclosed in its audited financial statements for financial year 2025. And finally, Unisem and Berhad saw its net profit drop 27.5% year-on-year to 90.4 million ringgit for the third quarter financial year 2025 from 26.8 billion ringgit a year earlier due to a foreign exchange losses and higher operating expenses at its new plant in Gopeng, Perak. Now that's a wrap for Morning Bell Updates with me, Anujaria, on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.